Walk into an optical shop and the price can feel almost impossible to read. Online sellers commonly advertise complete pairs for roughly $50 to $150. At the other end, a designer-branded frame alone can commonly run from $200 to $800 or more before the lenses are added. Those are not identical products. They may differ in materials, lens options, service, brand, and where they are sold. But the range creates a fair question. What is actually inside the price of a pair of glasses? The answer is not just plastic, metal, and a set of clear lenses. It is a chain, and every link can change what you finally pay. Start with what lands in your hands. There is the frame, which has to hold its shape, fit your face, and survive daily use. There are the lenses, which have to match a prescription and may need extra materials, treatments, or optical designs. Then there is the service around them, measuring, fitting, ordering, adjusting, repairing, and helping when the finished pair does not feel right. Those parts are bundled together at the counter so their economics can disappear into one price tag. A cheap frame with complex lenses can become an expensive pair. A costly brand name can sit around fairly ordinary lenses. An online seller may strip out much of the in-person service. A full optical store may build that service into its price. So before asking whether glasses are expensive, separate the physical object from the work and the selling system around it. The frame is where the biggest sticker shock story usually begins. In one former LensCrafters executive's reported account of visiting eyewear factories in China in 2019, E. Dean Butler said frames comparable to mass market lines were reportedly obtainable for roughly $4 to $8. He said frames with a finish comparable to designer labels such as Prada were reportedly obtainable for roughly $15. Those figures are striking. They are also easy to overstate. This was one executive's reported account of one factory visit. It was not a documented production bill for a Ray-Ban frame, a Prada frame, or any other specific product. Comparable does not mean identical. It does not tell us the order size, the contract terms, the quality control requirements, the rejection rate, the shipping arrangement, or who carried the inventory risk. It also does not include everything that happens after a frame leaves a factory. The product may still need inspection, packaging, freight, warehousing, distribution, sales staff, returns, and a place on a shelf. The narrow lesson is still useful. The physical frame can begin at a figure far below the retail tag. But that figure is the start of the journey, not a complete explanation of the final price. The lens figure from Butler's same account needs even more care. He described unspecified first-quality lenses as reportedly obtainable for roughly $1.25 each. The account did not specify a material, an index, a coating, or a prescription. So the number cannot tell us what a particular customer's finished lenses should cost. A lens is not simply clear material cut into a circle. Its job is to bend light in exactly the right way for the person wearing it. That job can become more demanding when the prescription is stronger, when one lens has to serve several viewing distances, or when the design has to manage more complicated correction. Material choices matter too. A thinner lens can be more comfortable in a stronger prescription. Treatments can reduce reflections, resist scratching, change with sunlight, or add other features. The lenses then have to be produced, checked, edged to the chosen frame, positioned correctly, and fitted in front of the wearer's eyes. None of that tells us a universal fair price. It tells us why a bare lens figure with no specifications attached cannot stand in for every finished lens. The low figure is real as a reported account. The leap from that figure to all lenses should be cheap is not. Then there is the name printed on the temple. EssilorLuxottica owns brands including Ray-Ban, Oakley, and Persol. For those owned names, it does not owe a fashion house a licensing royalty simply for using the brand. but the company also makes eyewear under licensed designer names including Prada, Chanel, Armani, Burberry, and Ralph Lauren. It licenses more than 20 designer names, while its wider corporate portfolio covers more than 150 brands across eyewear, lens technologies, and retail banners. That wider number is not a count of rival eyewear companies. It mixes several kinds of brands inside one corporate portfolio. Licensing creates a real cost flow. In its 2025 financial reporting, EssilorLuxottica recorded €249 million in royalty expense. That is a company-wide total, not a known royalty amount on a particular pair. And the direction matters. The customer pays the seller for the glasses. Separately, when a licensed fashion name is involved, the eyewear company can owe a royalty to the fashion house. Those are different payments moving between different parties. An owned brand such as Ray-Ban, Oakley, or Persol carries no such royalty. The label may still support a higher selling price because customers value design, status, familiarity, or trust. But part of the business behind a licensed label can also include money paid out for the right to use that name. Once the frame and lenses exist, somebody still has to sell, fit, and support them. EssilorLuxottica reports roughly 17,750 stores worldwide across banners that include LensCrafters, Sunglass Hut, Pearl Vision, Target Optical, and Grand Vision. That count does not mean the company directly operates every location. It includes franchised and licensed stores. But every storefront has lease and staffing economics, borne by whichever operator runs it. There is inventory to receive and display, employees to schedule, payments to process, products to secure, and customers to help. Different formats add different costs. A sunglasses-focused store is not the same operation as a full optical practice. Some optical-specific locations add clinicians, specialized measuring equipment, and on-site lab work. Some clinicians may be independent rather than store employees. The group also uses centralized labs, so an on-site lab is not part of every purchase. In-person service can continue after the sale. Frames may need adjusting. A customer may struggle with a new lens design, a screw may loosen, the fit may shift, or a remake may be needed. Stores also absorb the quiet cost of time spent with people who try on several frames and buy nothing. None of this means a store price is automatically reasonable. It means the shelf, the fitting, and the person helping you are not free layers. A retailer with physical locations has a different cost structure from a website, shipping from a centralized operation. That difference is part of what the price tag is funding, even though no receipt tells you exactly how much. EssilorLuxottica's own company-wide results give us a useful reality check. For every euro of consolidated group revenue in its 2025 reported accounts, roughly 39 cents went to cost of sales. That is the first large block. It covers the cost attached to the goods and operations recognized there, but it is not a factory cost estimate for your frame. The next major story is the size of the structure around those goods. Retail and selling operations, advertising and marketing, and general administration together consume a large share of group revenue. The accounts also contain royalties and the reported R&D expense line. These are separate company-wide accounting categories, not labels that can be pasted onto one customer's receipt. Why is that structure so large? Because this is not only a frame maker or only a lens maker. The consolidated group includes manufacturing, lens technologies, branded products, distribution, retail, and related operations spread across many markets. Selling through a global store network looks very different from moving one unbranded frame out of one factory. After the reported operating expenses, roughly 12 cents of each euro remained as reported operating profit. That is operating profit, not the markup on a pair and not the amount left after every item below the operating line. The company also publishes its own separately reported adjusted margin measure. That adjusted measure is not the same thing as the reported result, and it should not be casually relabeled as profit. So the accounts do not reveal the margin on your glasses. They show something more modest and more useful. Low factory-level figures do not travel straight to the bottom line. A large organization has a large cost system between production and reported operating profit. Insurance can add another layer, and it can make the price feel even less transparent. EssilorLuxottica owns iMed Vision Care. It does not own VSP. VSP is the largest standalone vision insurer by reported enrollment in the cited 2024 dataset and not owned by EssilorLuxottica. That description is deliberately narrow because the dataset does not represent every kind of vision benefit in every health plan. For a consumer, the important question is not simply whether a store says it takes your insurance. The real calculation is your annual premium plus your copays, plus any amount above the plan's allowance after the in-network discount. Then compare that total with the real cash price available somewhere else. An allowance can reduce what you pay at the counter without making the glasses free. A discount can lower a store's listed price without making it the cheapest final option. And a low cash price elsewhere may still come with less service or different products. Plan terms vary by employer, state, and coverage type. There is no single allowance that represents everyone. The useful habit is to compare complete totals, not the dramatic number printed beside the word benefit. To understand the company's reach, look briefly at how the group was assembled. In 2018, the Italian frame and eyewear company Luxottica combined with the French lens company Essilor in an all-share merger reported at roughly 46 billion euros. European and American regulators cleared that merger unconditionally. The group later acquired the European retail chain Grand Vision in a deal valued at roughly $8.5 billion. In 2021, the deal was approved subject to commitments to divest 351 stores in Belgium, Italy, and the Netherlands. The Commission's concern was specific. As originally proposed, the deal could make access to its eyewear products more difficult for rival opticians in those countries. The divestment commitments were the remedy attached to the approval. That history shows why the company's reach attracts competition scrutiny. It does not turn every part of the price chain into evidence of wrongdoing. This is where a popular claim needs a careful myth check. In a federal antitrust lawsuit, two different plaintiff groups made two different 80% style allegations. Direct purchasers alleged roughly 80% of United States retail revenue inside the market they proposed. Indirect purchasers separately alleged roughly 80% of brands inside a differently defined proposed market. Those are different denominators. They also rely on differently defined proposed markets created for the litigation. They cannot be merged into one clean statement that one company controls 80% of all eyewear. In 2025, the court rejected the proposed market definitions at the pleading stage. That ended this lawsuit's ability to establish either figure, but it did not measure or disprove either number. That was a legal sufficiency ruling, not an independent measurement of the whole eyewear industry. The case did not end in a way that proves either allegation false. Whatever you think about the company's scale, consumers still have practical ways to compare the chain. Online sellers such as Zenni and Warby Parker compete directly on price. Costco Optical provides another store-based option. Different sellers can assemble the frame, lenses, and service differently. The most useful tool is your prescription. The right to receive your own eyeglass prescription has existed since 1978. It is what allows you to take the result of an eye exam and shop somewhere else. The Federal Trade Commission updated the rule in 2024, adding confirmation and record-keeping requirements specifically for prescribers with a financial interest in eyewear sales. The change was meant to strengthen compliance with the existing handover requirement. It was not a new right to shop around. Having the prescription does not make every buying route equally easy. Progressive lenses, prisms, and precise pupillary distance fitting can be harder to get right by mail. A person with a straightforward order may be comfortable entering measurements online. Someone adapting to a complex lens may value an experienced fitter who can see how the frame sits and make adjustments in person. That is not an argument that the expensive option is always better. It is a reason to compare like with like. Ask whether the quote includes the lens material you need, the treatments you want, and help if the first result is uncomfortable. Ask for the cash price as well as the insurance price. Compare the exact frame when possible, then compare the complete lens package. Check what happens if the fit is wrong or the lenses need to be remade. Shopping around works best when you compare the whole offer, not just the frame tag or the amount due today. The product itself is also beginning to change. In 2026, EssilorLuxottica and Meta launched a Meta Glasses collection starting at $299. These products add cameras, audio, software, and artificial intelligence features to something that still has to fit on a face and, for some buyers, work with corrective lenses. That does not yet settle what the eyewear market will become. This is a newer, still developing part of the category. It may create new reasons to choose a frame, new service needs, and new costs that have little to do with the old question of plastic versus metal. The line between eyewear, personal electronics, and software is getting less tidy. The price chain may become less tidy with it. So, what is the real price of eyeglasses? One former executive's 2019 factory account gives us very low figures for some frames and unspecified lenses. Those figures are useful, but they are not a full accounting for a finished pair. The lens changes with the wearer. The frame changes with the material, design, and brand. A licensed fashion name can carry a royalty the eyewear company pays out to the fashion house, separate from the money the customer pays in. Owned names do not carry that royalty. Then comes the selling system. A website, an independent optician, and a global store network carry different costs and offer different service. Insurance can change the amount shown at the counter without revealing the lowest total cost. The company-wide financial waterfall keeps the story grounded, but it is not the margin on any one pair, and the concentration claim still needs its full context. Two different plaintiff groups made two different 80% style allegations, using different denominators and differently defined proposed markets. The court rejected those proposed market definitions at the pleading stage. That ended this lawsuit's ability to establish either figure, but it did not measure or disprove either number, and it did not prove either one false. The honest answer was never one magic figure. The price is the whole chain, assembled differently for each wearer. The smartest comparison is not factory material against a final receipt. It is one complete offer against another. That is what you are really buying when you buy a pair of glasses.